In this video, I'm going to show you what most people in YouTube in this industry won't do, and that is showing you losers and then showing you why they occurred, what I've learnt from them, and what I think in hindsight, the reasons for the trade, etc., and what my kind of targets were for the trades. So I had two losers on Euro Aussie today, and it's not that big of a deal. It's fine. It's part of the game. I'm not going to let it affect me in any way. Now, the reasons for the trades were basically the 6 to 10 was bearish. Now, as you can see, previous day was bearish. We're in a downtrend. To me, there was a pretty good sign. I know we'd taken out the lows of the previous day overnight in Asia session, and we had a run up, but we're in an overall downtrend. We're in an area that makes sense to look for short. So we had this support that was a break and retest area that was respected at the start, 6 to 10 a.m. bearish, coming into this support that was support, but to me, a support like this, okay, of course, it's something that you should be aware of, but due to the fact that it's a support, but the overall trend, etc., is down, then out of a resistance and a support in terms of immediate structure, the most likely to break is obviously the one against the trend. So I was aware that as long as I was getting in where I felt was a sensible area, then I could at least trade back into that area. So then on the 1 hour, we had a nice bearish candle break, created a break and retest area. So nice push here off the 1 hour 50, created this 4 hour bearish candle. So I was like, right, okay, well, I'll look for a trade that makes sense. So what has occurred is we've had this strong push down and then we're pulling back. So I was essentially looking for a trade that was going to do something like this: push, pull back, and then push, looking kind of the main target was the current low of the day, which I felt was reasonable. And then obviously if it was to go further down, it was to go further down. So going into more detail on the 5 minute, basically what I saw was this as support. So I saw that as support. I saw this had pushed beyond. I was originally looking for something in this area, 5 minute break of support, turned resistance and then pushed down. But due to where we were on the 4 hour, I thought, well, it's better to be a bit safer than sorry and wait and see what happens. Now, obviously, we closed back above that area. So I was like, well, the next logical area that makes sense to look for a reaction would be the current resistance, which is up here. So then you'd be selling high on the 5 minute, first management point down in there, second management there, and then obviously the low of the day has the kind of main target. So on the first trade, if I can, yep. So on the first trade, we had this was the fake out on the 5 minute of the 5 minute support. Price came, made a new high. Then we had a push back down, back below the 5 minute resistance. I basically looked for shorts in and around this area after this candle close, and my stop loss was above here. So yeah, that was essentially my trade. I was looking for this target down in here, and then the next target, same as how I spoke about in the 5 minute 1 hour. So what obviously occurred was pretty much got taken out. It went, made a new high. So I was like, well, it's just not to be. It's just not to be right now. So I let the 1 hour close. The 1 hour closed somewhat sideways bullish at the time. So to me, it was like, well, sideways can still be respecting this area, but we just have to be aware that after such a strong bearish candle, sideways bullish, we want it to go short, like with momentum pretty quickly. So we still hadn't closed beyond the resistance on the 15-minute. We created a decent bearish candle, 10:45 to 11, showing that the sellers could be back in. So then my second entry, which I got some profit on to cover some of my first loss, which was basically a full loss. This one I basically got to cover because we got into this area that pushed to create a new high. I was like, well, the momentum came in, but it wasn't really that strong. I went immediate into profit, but in order to really close as a bearish 1 hour candle, it really had to drop quite nicely, quite quickly through obviously this area that was a pretty strong area in the 1 minute because it was an area that created that next high. So we needed a close beyond here and then continuation basically for me to really believe that this trade was going to go further down at that moment in time. So my entry on the 1 minute was due to that 1 minute break of structure support. So we made the high, still hadn't closed beyond the 15-minute resistance, pushed beyond, broke the support, came back, retest. I got in around 1.5699, stop loss above the highs. And then once we got down into here, about 4 or 5 pips, I took some profit just to cover the previous loss, help with that. And also we were in the 1 minute oversold. So I knew that if the momentum wasn't going to continue quickly, then the likelihood was that we were probably going to go sideways at least for the next hour or even go higher. Now, I didn't expect the result that we got later on in the day. There was no way that I was looking for longs, even as a short term. I would rather take short term trades with the trend, with the momentum, and to me, it just wasn't making sense. Of course, there was a short term trade after this 4 hour close, but to me, I took pound dollar short rather than Euro Aussie long. So, but now looking at this pair, just to kind of refocus. So if I just remove these two, I'll go on my journal today, and it's just to show that you're not going to always be right. Now, what I've said to a few students is, with this trade, I can see why it was a good trade. I don't have any issue with it in terms of the entry and then the re-entry. As I said, I managed to basically get a bit of profit in that second entry, and there's so many times that those kind of trades work out nicely, at least to the current low of the day or a wee bit beyond the lows of the previous 1 hour, whatever it is that gives you that kind of reaction that makes the trade worthwhile. Essentially, even if it's quick, it still works. So price is now all the way back up at what is a strong resistance area. There have been a lot of people that have been looking for longs now because they've seen this reaction. So to me, price can still go short from here. It's just a deeper pullback. Obviously, we had this break and retest area that has been pushed beyond, but this was the origin of the move up here. This was the origin that's pushed price all the way down. Now, I'm not really one to enter all like up in here without really that much confirmation. It looks good to some people, but at the end of the day, you can see even right now, even if you were in here, yes, you could have had some decent profit if you took profit. But if you were trying to stay in the trade for longer, you've already given about half of your profit back to the market because there's no real proof of sellers coming in yet. It's a strong bullish candle in the 4 hour. Okay, it went higher, but there's no real reason to get into a trade in a short position. So yeah, now it's just about waiting. If this candle closes or like bullish on the day, then I'm probably going to change my bias to longs. Even though the trend is down, I can't say no to a bullish candle which will create new support on the daily, which could then be the platform to start breaking some structure, a deeper pullback. As I said on the weekly video, due to the last previous week's close, which we came right down into the open and have respected up until now, it could be time for a deeper pullback into 1.6050, 1.61, which is a good 300 pips or so. So in the longer term, that can be something that makes sense. In order for that to make sense to me, I need a bullish candle close like what we currently have just now. If nothing really changes in terms of the candle looks, I can definitely look for reasons to look for longs, because this could be a break back in scenario here if we get a 4 hour bullish candle close around this area, and then we're around here for tomorrow London session. Then first target would be highs of today, and then obviously beyond. But yeah, it's just showing you that you have to go with what the market's showing you, but also you don't need to be early. Like, there's no need to be at the start of a trend, because if you're working with higher time frame trends, they last days, weeks, months even. So something like EURAUD, if this is to go long from here, it's going to go long, and it's going to break the. Let's look at the 4 hour. The 4 hour just now from a kind of wider standpoint. You could say that it has broken. It has broken a push, but it didn't make a new low actually. So it's a bit messy on the 4 hour. So to me, until it's actually really stands out, then to me the original trend prevails until otherwise kind of shown, basically. So a change in a 4 hour trend or a daily trend can last for days, weeks. So there's no need to be first. There is a 1 hour break and retest area here, which seems to be getting respected, but we're right into a strong resistance area in a daily downtrend that just it doesn't make sense to trade into. So yeah, I will be watching and seeing what EURAUD does. And if this daily candle closes like this, then obviously that's going to create new support on the daily chart, and we should get a push back above last month's low. And yeah, see what occurs. And also, just since I'm here, I might as well go over the pound dollar trade that I took. So pound dollar, I took shorts. So this was a continuation trade. This was a quick trade, very similar to what I was seeing with EURAUD. Just going with the immediate momentum before it started to do a pullback, which is obviously what's kind of occurring now. Previous day was bullish, but we're in strong resistance. We're really slowing down in pound dollar. The dollar today was strong at the time that I was looking at the chart, so it made sense. Previous 4 hour at the time was a strong bearish candle. We were coming into support, but I was just looking for basically the lows of that 4 hour, which was also the lows of the day at the time, and then a wee bit beyond, which we've hit the 4 hour 50, which is also kind of this kind of area that is the origin of that push to the upside. So that was the extended target. Now looking at the 1 hour, at the time, I still have the alert up here. It was a 1 hour break and retest, but by the time the price got all the way up here, I'm looking at the 10 till 2 candle. By the time that price comes from the area that price is closed at the 10 till 2 close, which is here, 1 till 2, logically, if price is to come back up into here and then show evidence of sellers, the likelihood is that that's going to be at least 2, 3 hours, 4 hours of price action. So therefore, it would be beyond my entry point, and it's probably just going to go sideways for the, not exactly sideways, maybe something like pound dollar or something like a 20, 30 pip range. I'm not really that bothered in it. I would rather just get these kind of fast movements and get 20 pips, 30 pips, but still faster, essentially. So yeah, I was like, well, I can see this 1 hour break and retest area, but I'm not really interested in shorting it if it gets there today. I would rather just go with the immediate momentum. So I was seeing how the 1 hours were closing. Then what happened was we got, as you can see, this was the end of the 4 hour. Here, we were respecting this 15-minute break and retest area. So we had strong push down, support, didn't get all the way back up to here before resistance came in again, made a new low, came back into the resistance area, and essentially we're just looking for, see if it can get down to the origin, which is, it looks tighter on the 15-minute, but you'll see on the 5-minute, the 1 minute, essentially from the 1.3694 down into 1.3682. So like 12 pips, 11 pips, because that is the origin of the pullback. After the push down, you have to be aware of how price reacts at the origin of the pullback that's created the pullback, because buyers have came in here. So then we go down, and as you can see, we had a reaction just at the start of the new 4 hour. So what I did was I entered. Now, you can see here that we had a stochastic over bought. So we had the overbought, very similar to EURAUD. I didn't get in right at here because to me at that time it's in an uptrend. What I did was I waited for that break of structure in the 1 minute, back below the 1 minute 50, entered on price in this wick here because it was at an area that made sense, put my stop loss above the highs, which was at the time the highs of the current 4 hour candle as well as the current 1 hour candle. Even though that candle had just started, it made sense to me to take the trade. So then price has pushed down. This was the bodies of the low of the day, low of the 4 hour. So this was an area that I took some profit off. It was also the 1 minute oversold. So again, I expect a reaction. How big of a reaction? You're never going to know in trading. People that say that they do know, they don't. It's impossible to be able to say exactly how big of a reaction is going to happen. All you can have is your plan and what a reaction, like how much of a reaction is enough to take a trade. So continuation trade. My expectations in and out within the hour. My sell high area, 15-minute break and retest area. So it wasn't a 15-minute lower high. It wasn't the ultimate kind of area for sell high in the 15-minute, but a sell high in the 15-minute makes more sense. Lower high or a higher low for a buy low if you're expecting to be in a trade for longer. But if you're in a 15-minute break and retest area in fast momentum with the 1 hour, 4 hour on your side, it's almost too long and too much for price to come back to the origin of the move that created the low. Because by the time it's got there, that probably means that 1 hour is closed in the opposite direction to where you want to go, and then things are going to be a bit slower in turning around. It's just, again, logic. So price basically came back up into my entry once after I'd taken a bit of profit down here. Left my stop loss where it was. I felt as if, well, something should happen. 1 minute 50 again. We weren't quite oversold, but it's a deep pullback. 1 minute lower high made sense. Price then goes, just about makes a new low, and then steep pullback. Again, double top. 1 minute overbought, and a nice candle as well. And we're in a downtrend at this time because we've taken out the lows. I've entered there, taken out the support, and then it's just about making sure that we stick to the downtrend. Then what happens is we get beyond the wick of and essentially make a new low. Now there was hardly any reaction here, which is something that is more rare than not, but it just so happens that whenever you have things in line with your higher time frames, you're getting in at a good area on the lower time frames, you're giving yourself more chance of a less kind of reaction at these areas than would normally be if price was going sideways, or there wasn't really that much momentum, or it wasn't strong versus weak. All these things that then would be against your trade anyway before you get in it. Whereas if you give your trade the best chance due to those factors, you can get these moves that basically it just drops. Even on the 1 minute, it looks really nice. So yeah, it eventually got down into 1.3660, which at the end of the day, you're talking an entry up in this area that your stop loss is above the highs, and management point just beyond beyond a 1-to-1, which can happen, especially in these continuations. Of course, yes, you can be like, oh, well, I'm getting in at the lower high, I'm going to put my stop loss just above it. Well, to me, you can do that if you want, but it's not worth it in the long run. It's not worth it in the long run because you're going to get stopped so many times whenever actually your general idea is correct. So then we then go down, and then before you know it, you're talking, after taking some profit, you're talking a 1-to-3 for a 1-to-4 risk to reward ratio that then covers my two trades before, gets in and out within the hour. So you're entering 2, and then you're done by 10-3. And then, of course, you can leave a bit on, see if it does keep on running. But for me, where it was coming into on the higher time frames, I just wanted to close most off anyway, just because I wanted to finish the day profitable after my EURAUD trades. And yeah, I was aware of this break and retest level here, which we've hit. I'm also aware that the previous day was bullish, and I'm also aware that the higher time frame is an uptrend, and we've made a higher high, that this could just be a higher low. This could be respected, this area here, and we could go higher again to finish off the week, and this is just essentially a deep pullback. Who knows? It's still up for debate. What pound dollar really wants to do, but I thought I would go over these three trades from today. 2 losses, one full loss, a partial loss, and a good win on pound dollar. All 3 of them were continuation trades that I was just looking for that immediate momentum. EURAUD just so happened to turn around. As I say, to have such a strong movement from that area that was in EURAUD, there's nothing really saying to me that area should be creating that kind of reaction. So it could be just creating a fresh reaction to then be used later on the week or next week or whatever. Those kind of moves happen, and those are the days that if I was to get a loss, they would be more likely to happen on these kind of days that irrational movements happen, like EURAUD. I mean, if we go back to EURAUD again, just to go over it on the higher time frames. Yes, it's hit the open of the weekly candle that was pretty bullish. That makes sense to me, but to at least get another push below the 6 till 10 candle, I mean, the low of that's 1.5681, and the low of that 4 hour that I entered in on was 1 point. So there was 2 pips between them, 2 pips of a difference, and yeah, I was close. I mean, there is a 4 hour break and retest actually here, which was reacted from, and then price pushed back. But last candle at the time was pretty decent bearish, a bit of a wick to the downside, didn't close beyond the lows, but to get price down into this wick low, to me, makes sense, or at least beyond the lows of the 6 till 10, even if it wasn't to get to the lows of the day. And that was basically my thoughts for those trades. And I'm not really interested in taking that long until I see real proof of buyers coming into the market for a sustained period of time, because it just makes it worthwhile in the longer run for your trading results. And yeah, I hope this video has been of use. And as I always say, you learn more from your losses. Even though I don't really feel as if I've learned that much from this loss, in particular, because it was to be a very quick trade. So I wasn't expecting to be in the trade for that long. It was just so happened that the 1 hour that I've entered in on went sideways, and then the next one was a very strong bullish one in the opposite direction to where I was looking, where it's not really showing that it should be doing that on the higher time frames, or else I would be avoiding the trade, obviously.